Good evening, VB Nation. My name is Ryan. Welcome to the channel. Now, today the market got a little optimism, right? We got the inflation report out, 2.8%. First time we've seen some relief there with the inflation report in several months. Now, tonight's presentation, right? I always go over the market timing graph and, more importantly, look at CPI from a chart perspective. I've been giving, a heads up that CPI has been ticking up even before the talk of the tariffs, right? So that's why I think the market's been selling off, because not only do we have to worry about tariffs, which, are inflationary by nature for the most part, but the inflation is already becoming a problem before the tariffs really even kick in, right? And I even saw this morning that the Europeans are retaliating our 25% tariff. Now they're putting tariffs on about $28 billion worth of US goods. Now, tonight's presentation, there's a lot of things we want to cover, right? NVIDIA. Is it a good time to buy NVIDIA? See the optimism, the gap up this morning. I'm cautious when it comes to NVIDIA's hitting level support here. We're going to take a look at that chart as well. We are going to jump right into the Qs, the SPY, and the VectorVest composite to get a sense of broad market movement. And more importantly, to get a sense of, is the bottom in? Is it a good time to start, taking nibbles in the market, right? And I notice if you've been, tiptoeing into the market a little bit over the last week or two, not the biggest problem, but just make sure you have a plan in place in case there's more downside action. And on top of that, one of the things I want to show you is the valuation of our NASDAQ 100 watch list. And there's something, very interesting about the divergence between price action and the valuation since COVID. So we're going to take a look at that information as well. So that way, keep you on the right side of the market. I know it's difficult to make money right now, especially, the market's so oversold. A lot of people, don't want to necessarily, open up short positions or hedging positions right now. I get it. Covered call is still probably one of the best routes to go right now if you own 100 lots of shares. So get ready and let's get started so that way we can be on the right side of the market and be ready when opportunities present themselves in the near future. Here we're on the homepage of the VectorVest 7 software. This really just gives us a sense of market direction, especially if you're new to this channel. This is your first time watching. We are trend followers, right? Now, I will say this, the optimism from the inflation report, we're seeing that swept away pretty quickly, and I'm not too surprised by that. Now, I will give you a hint here. On the color guard, this trend column, right? You see the first down here? This is what's called our primary wave signal. This is our fastest market timing signal. Typically used, by very active traders or, more aggressive swing traders, that kind of nature. So if you want to do some bottom fishing, this is the signal you at least want to wait for. Otherwise, if you just keep buying, you're pretty much trying to catch a falling knife, and you're probably going to hurt yourself in the meantime, right? Especially if you're not a disciplined investor and you let things become emotional. That is going to gear you to a very bad direction in this type of market environment. So we're seeing the red light, follow through with the downside action of the market, right? As we take a look at the major indices here, Dow Jones down 315 points, right? The NASDAQ up 119. It was up much more, even than Dow Jones. A lot of this was in positive territory right at market open. Obviously, we've given that back rather quickly, right? And I'm not surprised that the NASDAQ, is still in positive territory because inflation really does affect growth stocks more so than the rest of the market. So that's why I'm seeing the optimism there. But, as you can see right now, it just keeps coming back a little bit further here. We were at 119 a moment ago. So don't go ahead and just jump in the market. If you do, maybe a little tiptoe, undervalued stocks that, are at least trending up a little bit or breaking a downward trend, things of that nature, right? Now, I will say this, we are getting close to getting that shopping list ready, right? We see the MTI here at 0.5, telling me that the market is currently looking for a bottom. Doesn't guarantee that it's in. It's just saying that we're getting close to that point, right? So to really, get a sense of, when the bottom could come in, that's why you want to couple this with that primary wave, right? Typically, we talk about a blast off day, large, broad market enthusiasm, a jump in our proprietary indicators such as the BSR, which is also at a very critical level, 0.2. We've said this before in the past. Just as the MTI can help identify market bottoms, so can the BSR, and the level to look for there is 0.2. We can see right now, like, we just got a red light while talking about it at 0.19. So that's why I've been saying, get the shopping list ready. Tomorrow night's video, we are going to go more into stocks, so that way you can, put some good stocks on your radar for when opportunities present themselves. So now let's go ahead and jump in some of the charts here and get a better sense of what's going on in the market and what's really driving the market in today's price action. Now, this is the chart I always look at after we get our inflation report. This is CPI data over the last 5 years. So if this is your first time watching, get you caught up to speed here. This red line, these two red lines, is a channel that we experienced here. We see that channel lasting from about July 2023 until we broke out to the downside of it in August 2nd, 2024. That's when we had some optimism with the inflation getting close to the Fed's 2% target, which is represented by the yellow line. Now, this green line here was a level of support that I saw. Yes, I'm treating this like a regular stock chart. And if I scoot this back a little bit, you can see several touches on the support line at 2.5. So you see why I put it there in the first place. Now let's zoom into the last 6 months, right? This is my concern. If we take a look at the date line here, now the bottom of CPI came in October's report here. We see that inflation was at 2.4. And if I scroll this forward here, it really started ticking up in November, coming in at 2.6. Then December here, 2.7. You can see the tick up here, 2.9 in January, February, 3% for the CPI data. So you can see why the market was getting spooked. Now, inflation report this morning came out at 2.8, right? So if I use a horizontal line, that's going to put us out right here. When the software updates after the close today, the new data will be here. But until then, we could see that the drop here is pretty significant at 2.8%. But look, we're still at a trend line, right? And I'm actually not surprised that we pulled back this time because, again, I am treating this like a stock chart, and this is becoming a level of resistance. The red line coming in at 3, which is the bottom end of that channel that I was speaking of before. So we can see CPI chart did get some resistance here, pulling back to 2.8. Now, the big concern is the tariffs, right? The tariffs, just got into effect and they're heating up. I did talk about, European countries, doing retaliatory tariffs because of the aluminum and steel tariffs that Trump just imposed earlier this week. So that will play out and put pressure when it comes to inflation, right? So inflation was a problem before the tariffs. So if the tariffs do take effect and they only amplify concerns of, recessions and tariffs, that's not going to be good for the economy. And obviously that's not going to play out very well for the stock market. So now let's take a look at some of the major indexes. The VectorVest composite, which is, over 9,000 stocks we're tracking. That's how we utilize the VectorVest 7 software to follow the trends of the market. And we're going to take a look at the SPY along with the QQQ. All right, here's the chart of NVIDIA. I've been talking about the descending channel of NVIDIA for quite some time, right? Here's earnings right here just before that. We got the gap up close to the resistance level of the upper channel here, of the upper trend line on this channel. We could see the pullback, just with the general market now, right? Now, if I scroll this back, a very key level I'm looking at is right around $100. I've got two trend lines here. I've got the bottom of the channel and a longer term trend line coming in right around $100 here. We can see price action got very close to this. If we use the low came in at $104.77. Hey, and if you were one of the individuals that got into NVIDIA closer to $100, can't be mad at it. Just stay disciplined. Now, I'm not sold on today's, optimism when it comes to NVIDIA. We got the gap up, but look at this large upper wick. Now, this wick is touching a key level of resistance now, and the bottom of that resistance level is at 117. You can see the zone I have here from about 117 to 121, which caught it last time. That worked out pretty well for the bottom fishers. Nice swing trade there. Obviously, taking profits right at the top of this channel here would have been the ideal scenario, right? Or putting puts on NVIDIA as the pullback and rejection was confirmed from this level. Now, as far as NVIDIA, I see the body of the candlestick now making its way downward, but I have a gap here to fill, right? And just from a technical perspective, I do see more downside in action with NVIDIA, but it really just determines what the market is thinking, right? Now with inflation, cooling off a little bit, yes, I can see a little bit of optimism in the short term, but I do see NVIDIA, hitting a real level of resistance, right around here. If you want some confirmation, 121, I know it's about $10 away, just shy of $10 away. Or like I said before, nibble, tiptoe, right? Especially with the market volatility. Don't go all in on a stock right now. because the market's still pulling back, right? And if you didn't get in at the bottom, and if the bottom's not in on that stock, well, then you have to stay disciplined after that. So that's why I'm saying have a little bit more patience when it comes to NVIDIA. And now let's take a look at some of the major indexes and just see what optimism is there. Scroll down here. We've got the SPY. Look at this. We've got the gap up this morning. Not only is the gap up filled, but look at that candlestick. Big bodied candlestick to the downside, coming in at 554. Just broke a level of resistance. This is why I haven't really been putting out a bunch of stocks. You see some levels I got here. My line's around 544. So I do see some more downside action right now. I'm not jumping in the market by any means. I'm not even day trading right now just because the volatility, the premiums are so high. So I'm taking a break, enjoy life a little bit, right? Have some patience, let the market come to you. Now here's the NASDAQ, right? The QQQ, the NASDAQ 100. Obviously, if you're trading NVIDIA or semiconductors, big tech in general, this is what you want to look at. You see a clear downward trend line here, right? You see the trend line? And I saw the gap up this morning, which occurred right at that trend line. Not much optimism, right? We had a little bit of a wick, but other than that, hey, we're about to meet the body of yesterday's candlestick. So that's why I said I'm not too sold. If I scroll this back a little bit here, I mean, we've got some downside room before we could really get another level support coming in at 448, another level support at 441. Now, if I do use a horizontal line here, I do see some consolidation probably around this point right here. So I got a little touch here, some consolidation here. And that's going to put us around 466, which at no surprise, we got these wicks coming off of this level as of yesterday and the day before, right? So that's what I'm saying. Have some patience in the market. Tomorrow night's video, I don't know how many stocks we're going to do. And actually, you know what? Do this. In the comment section below, put stocks that you are interested in when it comes to bottom fishing, right? Those stocks are going to be on the list tomorrow. Because if you watch this video till the end, at least should reward you. And I'm going to do the same thing, right? I'm going to take a look at some stocks, undervalued stocks, growth rate, and earnings. And the reason why I'm looking at undervalued stocks. So now we're in the watch list viewer, and I've got the watch list of the NASDAQ 100. So I'm going to right click. I'm going to view watch list average graph. Drag this over. And we're going to go back to 10 years. And this is a very interesting thing I see here. Do you notice pre-COVID that valuation and the NASDAQ 100 are pretty close together, right? They started to diverge away from each other when it came to, around COVID 2020. But look at the explosive divergence between our value of the NASDAQ 100 and price action itself. You can see the divergence occurring rather rapidly after the COVID era, right? Near zero interest rates, influx of money into the economy. I'm not too surprised by that. We can see the gap between price action and the valuation. Now, currently, we value the NASDAQ 100 at 233, right? And we see the valuation on the decline of the NASDAQ 100 on top of that. Currently sits at 276. Now, just a moment ago, I was talking about a level around 244, right? I know a lot of fears and a lot of talk's been going around about how the market is so overvalued right now. So if there's any real time, to correct that, along with the tariffs, rising inflation, geopolitical concerns, I do see that as a concern, right? And we're seeing price action starting to drop back a little bit. So I wouldn't be surprised for the Qs to go down a little bit more. And honestly, the market kind of needs this, right? To kind of reset itself, get back on track with the valuation of the entities within the NASDAQ 100. Now, I hope everybody enjoyed tonight's presentation. Again, put your stocks in the comment section below. Tomorrow evening, we're going to break them down and just see, take a look at some levels, some trend lines, some proprietary indicators. So that way we can make better decisions and get in on the bottom more accurately. Now, if you enjoyed tonight's presentation, make sure you hit that like button, subscribe to the channel if you're new, and definitely share it amongst your social circles if you think it can help them make better financial investments in the future. Have a good night, and I'll see you tomorrow evening.